Both companies talking about uncertainty from the trade war with China. Contessa, main question, is all of this price action now telling us that the bad news is now largely priced in?
I mean, I do think a lot of the bad news is priced in. The problem is that there's really no resolution in sight. Weather is never a controllable factor in farming. They had those Midwest floods. That was a big issue for especially the soybean farmers that had already gotten hit by the end of tariffs. There was a 50% drop in overall exports to China from 2018 from 2017. And when you look at soybeans in particular, then they got stuck because of flooding, trying to get those shipments down to the port of Louisiana. How do you overcome that?
So all that said, the fact that Deere's only 13% off the highs, it's like, I mean, they've been in a pretty tough environment.
Listen, year to date, it's only down 1%, despite the environment. And let's not forget they have forestry products as well that sort of supplement their bottom line. So it's not all bad news.
What's the deal with ag right now? I mean, we got the headlines that China's going to suspend its purchases, but then it was not clear how much of the ag they were still purchasing. I mean, you've been in the middle of this, time and again. What is the
good news is that the soybean harvest does not come in until they've got about another month before they start harvesting soybeans. The same thing, I was on this rice farm yesterday. The rice will get harvested at the end of September, beginning of October. They're hoping there's a real thaw in the relationship and then they can move on. Their sense is that their customers in China are not going to desert them, that they want to come back, they want to buy from U.S. farmers, but the deal has to get done for that to happen.
It's a big if, though. It's a big hurdle to overcome. So we'll see. They've got some time. Let's talk about the U.S. consumer. Different part of the economy, much bigger part, and a lot of mixed signals there, too. Check out some of the stocks this week. Kohl's down 6%, Macy's down 16%, Tapestry, the Coach and Kate Spade parent company, down 26%. The retail ETF on pace for its third straight negative week, Court. And yet, the retail sales report overall was strong for the month. Walmart, Target, doing just fine this year. And we hear from a slew of them, including Target and Kohl's next week.
Yeah, so I think obviously you have to do your homework when you're looking at retailers because you cannot paint them all with the same brush, even though we know that the consumer is still the strongest part of the economy. You talked about that retail sales number yesterday was very strong. And in fact, we've seen the strongest 5-month growth rate since 2005, 2006, when you look at that. Now, one thing that I always like to be careful of is the retail sales number is month to month.
Yeah.
And then the earnings reports are year over year. Yeah. So, for instance, department store sales month to month in the retail sales report were up, but year over year we're still down about 5%. So there is that. And you look at a company like Macy's, and many people say Jeff Gennette is doing what he can as far as innovation, but it's still on the mall, and people aren't going to the mall.
And they had a fashion miss. They said on the call.
You're right.
How do you have a fashion miss when you have all these people who are dedicated to knowing consumer trends, to figuring out what we want?
I'm still amazed they can ever get it right because it beats me.
I mean, obviously,
fashion miss every day.
When you're a company at this level, you can't afford a fashion miss. And is that what you're seeing with Coach as well, or Kate Spade? I know Coach is doing better, but Kate Spade had a big miss as well.
Yeah, and Kate Spade has been weak for some time. I mean, basically pretty much since Tapestry bought them and moved from Coach to the name Tapestry and became this multi-brand retailer. So I think that's part of the big problem and pressure on the stock is people are wondering if Kate Spade can be turned around. In the beginning, they said, give us some time.
Right.
And I think there was belief it would happen. And now that belief is almost gone. The handbag market in North America is relatively soft, too. So they're not playing into a really strong hand there. But you're right. The trends at Kate Spade just are not what consumers want, especially in store. The online numbers there are actually still pretty decent.
Quick question. The Kohl's move to me is interesting because Kohl's always seems like it's the better performer relative to someone like Macy's. They keep trading down in tandem. Kohl's is in strip malls. It's easier to park. They have those great partnerships with Amazon. They seem to have gotten fashion and the mix a little bit better. Are they stumbling? What's going on?
You're right, Kelly. They have been doing better. Although the first quarter was pretty messy for Kohl's. I think the comps were down like 3%. So that sort of surprised a lot of folks. And until we hear from them again, there just may be concern that even they can't figure this out right now. And I think, again, we just have to come back to the fact that the consumer is strong, but we also have more choices than we have ever had before. And we have the financial flexibility to be picky. So, we're buying, doing that high-low thing still, where we'll have some luxury product, but then still going to Target and
we all love a bargain.
Yeah, right? No matter how much money you have.
It's value. It really is. All right. That's helpful. We'll see what next week brings. You're going to need your beauty sleep for that one. Just sleep here. You know what I'm saying. Anyway, Disney's box office domination is in full display this year. It is the first studio ever to have 5 movies gross more than $1 billion in a single year, and it has 2 more films still to come, guys. Frozen 2 and Star Wars Rise of Skywalker, both projected to top the $1 billion mark. Also interesting, Disney is apparently working on a way to crack down on password sharing as it gets ready to launch Disney Plus. Now, all of this content is the perfect setup for the launch of that streaming service in a couple of months.
Absolutely. For those who didn't see them in the theater, and if you look at the ones that did surpass that $1 billion mark, these are movies that are either remakes. I'm talking about Toy Story, Aladdin, The Lion King. So it's things that will get people in the door who are kind of nostalgic for, maybe their childhood. They want to see what it looks like with this new technology that's out there. And also, of course, kind of superhero. I wouldn't necessarily call Star Wars a superhero movie, but
sci-fi.
Kind of sci-fi, action-oriented.
All of this has in common, none of it is rated R. They're all rated family-friendly. PG-13 is as bad as it gets. So what does that tell you about where the trend is going? Just when you think the movie theater is dead, you've got all these movies surpassing the $1 billion mark.
Ironically, the movie theaters themselves aren't doing as well because there's this sense of, is it sustainable? They're trying some new business plans. I don't know if anybody here is using the AMC subscription service.
We're trying it out. Testing it out because of some of the summer movies that we talked about that, we were interested in seeing The Lion King and seeing Aladdin and,
but you don't even have kids yet. This is just you and the husband going to see
Aladdin on our own.
You can get the streaming service and put Toy Story 4 on repeat and run all day long, which is the value for streaming for all these Disney movies for families, I think.
But I think that's a good point, too, with regard to the password sharing, because you do so often hear. I was talking with a friend the other day, and they said that they're using the password for, I think it was Showtime. They don't know what the password is. It's for someone they haven't spoken to in 8 years.
But it's logged in.
But they're still logged in.
I'm a grown adult. I'm using my brother's Netflix account to log in.
It on national television.
I gotta come clean. I need this off my conscience. I feel very guilty about it. Finally today, nearly $400 million worth of luxury cars is hitting the block at Monterey Car Week in California. You might remember Jay Leno recently told us that investing in a McLaren F1 was one of the best financial decisions he ever made.
I bought my McLaren F1 in 1999 for $800,000. And the last offer I got was $17,500,000, and one just sold for $22 million.
Robert Frank is out at this event and happens to be standing in front of another McLaren F1 up for auction this week. How many of these cars are there, Robert?
Well, they only made 100, and there's only 60 on the road. We are at Monterey, where thousands of the wealthiest collectors in the world come here. The richest collectors and the most expensive cars. This car is the star of the week. It's the McLaren F1 from 1994. And this retailed for $800,000 when it was launched. This car is 25 years old, which is amazing. But let me show you the coolest part. Wow. I want you to look inside here. Look at where the seat and the steering wheel is. It's right in the middle, just like a true Formula One car, because this car really is a race car. And then look at the sound system. It's got a CD changer, guys, so you can put your Pearl Jam, your Nirvana in there.
Pearl Jam.
and this car's CD changer included going to go for probably 23 or maybe even more, $23 million. So this is regarded as the first supercar of which
Robert,
many have followed. But again, 25 years old, look at it. It's amazing.
Yeah, it is lovely. We saw you earlier talking about the millennials who are out there at the show and what they're interested in, which was fascinating. The question everyone was asking is, what do these millennials have all their money from? Is this a lot of like tech and startup CEOs, people coming off IPOs?
It's a lot of tech guys. There's a lot of, marijuana money, a lot of sort of pot entrepreneurs here. And a lot of millennials, we're in a strong jobs economy. They're in good paying management and executive jobs now. They've been saving. So a lot of the people who are here, millennials, they're buying $30,000, $40,000, $50,000 cars that they wanted for a long time. Not a lot of money, but they just have good jobs. And in this economy, the consumer is holding up really well, as Courtney well knows. And even at the top, especially at the top, the consumer is holding up well. So lots of strong bidding so far here at Pebble Beach. And this is RM Sotheby's. They had a good auction last night. We'll see what this sells for tonight.
A lot of marijuana money?
I know. I just got to say, if you're driving that car, you better not be playing Pearl Jam.
Yeah, and smoking marijuana.
You better be playing the Aladdin soundtrack.